Thank you for joining us for Managing Your Money, tax tips that you can use. My name is Brenda Bryant. I'm an instructor here at UNR Extension. And this class is to help you relieve some of that stress that you have when it comes time for, oh my gosh, it's tax season and I'm going crazy. So we're going to talk about several different things. We're going to talk about keeping good records, knowing what your deductions are, understanding your tax obligations, compliance, and when and what to hire as a qualified professional. So let's go on the journey together. So these tax tips are for you. Taxes can feel overwhelming. We already know that, especially when you're running a small business. And when you're just getting started, it seems to be even harder because you're not really sure exactly what you need to do. But with a few simple habits, you can make tax time less stressful and maybe even save some money. So here's some beginner-friendly tips that you can use that will keep you on track. Let's do a really quick overview of financial statements. And you hear financial statements all the time. And if you're talking to a financial professional or if you're talking to another business owner, they will talk about your financial statements. You may not know what financial statements are. So let's give a really quick overview of this. So an income statement, and you will hear that termed in many different ways. You will hear income statement, you will hear profit and loss statement, you will hear P&L. All of those are the same. And in that income statement, we're looking at revenue, we're looking at the income, we're looking at the money that's coming in from the sale of the product or service that you offer. We're looking at expenses. What are those things that I have to pay in order for my business to run? So if I have to pay rent or if I have to pay for gas for my vehicle, etc. So what are those expenses that I have? And so the income coming in is going to be a plus. That's money that I'm getting more of. The expenses that I pay are going to be a minus because those are things I'm using that money to get those bills paid. And so the difference that I'm looking at between my income coming in and my expenses going out is going to be my profitability. So you may hear terms like net profit and gross profit and all of those kinds of things, but just think of profit as when I look at all the money coming in and I look at all the money coming out, is there money left over? Do I have a positive, which is a profit, or do I have a negative, which is a loss? That's where that name P&L comes from, or profit or loss statement comes from, because this is the only financial document, the only financial statement that you can have that allows you to have a negative. So I can have, if I have a positive, my business made a profit. If I have a negative, my business got a loss. I had more expenses going out. I had more money going out than I had coming in. Another financial statement that we look at is called a balance sheet. Now, balance sheet is different from an income statement in that this balance sheet must balance. Well, what are we balancing? Well, we're looking at three things that go on the balance sheet. We're looking at assets, liabilities, and equity. Assets are those things that the company owns, and they are things that increase the value of the company. So if my assets are the things that I own my bank account, I own my vehicle, I own the equipment that my business has. So those are considered assets. Liabilities are what are the things that I owe. So, do I have a loan that is paying for that equipment? If I have a loan that is paying for that equipment, that loan is called a liability. It is something that I owe. And then the third piece of the balance sheet is called equity. So, what is the value of my business? If I look at how much I have in assets and I look at how much I'm paying out in liabilities, the difference in the two is going to be my equity, or what is the worth of my business. Quick example, I have $100,000 in assets. I have $25,000 in liabilities, and so my equity is $75,000. So when I said the balance sheet has the balance is simply my assets equal my liabilities plus my equity. And this is one of those financial statements that you definitely want to take a look at. You want to see the standing of your business. The third financial statement is a cash flow statement. And a cash flow statement is literally to look at how we're making good decisions in our business. How are we using the money coming in, and how are we dispersing the money going out? So, am I making good investments? Am I buying things that make sense to the business? Am I doing things that helps build the business up? So that's what my cash flow statement is looking at. So it's just a quick overview of your financial statements, and we do have other classes that go much deeper into the financial statements and how they work. So when we talk about how to keep good records, we're looking at the idea of making sure that we're keeping track of those things, that money that comes in and that money goes out. So we're looking at bookkeeping is the foundation of stress-free taxes. The reason for that is if we're keeping good books, and that's kind of an accounting type phrase, books meaning the transactions that we've had throughout our business. We want to track and keep our receipts. We want to make sure that every time money touches us, whether it's money coming in or money going out of our business, we are tracking it. And that's what bookkeeping is. Bookkeeping is those transactions that we keep in an organized format that allow us to see how money comes into our business and how money goes out of our business. And we need to create some kind of a tracking system. If you are very new at this, you're just getting started at this, you may just be looking at a spreadsheet, an Excel spreadsheet, a Google spreadsheet, just so that we're tracking this money came in and that money went out. Or we may be looking at software, and there's several different kinds of software out there that will allow us to put those transactions into that software, and so that we can actually see the movement of our money. One that you probably have heard about the most is QuickBooks, but do understand that there are a lot of other ones out there, and you may have one that is industry specific for exactly what you do. So if you're a construction company, there may be a construction specific software that allows you to do the tracking of the money coming in and going out, as well as many other things that it will help you do as you build your construction business. The most important thing that we're going to talk about here, the tracking is extremely important, making sure you have the receipts, having some kind of a system. But this is the one that will get you in the most trouble. You need to keep your personal and your business transactions separate. Personal, I'm paying my mortgage. That's personal. Business, I'm paying for the equipment in my business. That's business. So we need to make sure at all times that we keep the personal and business separate. And the best way to do that is to have two different bank accounts. We have a personal bank account and we have a business banking account. We also have a personal debit card and we have a business debit card. We have a personal credit card and we have a business credit card. Again, we want to keep those separate. And the fun way to keep our cards separate is give them different colors so that it triggers in our heads that, oh, I picked up the wrong card to pay for this thing at Home Depot or Office Depot, or when I went to get gas for the company car, I picked up the wrong card, or when I went to get gas for the personal car, did I pick up the correct card? So keep that one thing in mind as you are setting up to look at taxes. The IRS is very specific about you keeping your personal stuff and your business stuff completely separate. So let's look at a little bit on the accounting software and different kind of tools that you can use. So you can choose an accounting software. We talked about probably one that you know about is QuickBooks, but there's a accounting software called Xero. There's FreshBooks, and there's other different things that are out there that you can use as a software. What I recommend is when you are ready to get a software for your company, I do recommend you do your homework, do some research out there, find out what's available and what's not. And the next thing I recommend is that you talk to a financial professional, an accounting professional, whether it's a bookkeeper, whether it's your CPA, whether it's an accountant, okay, whether it's a tax preparer. Talk to them before you put your money down for the software that you want to use to make sure that that software and the size of that software is appropriate for you. As you're going out and doing your research, you want to look at what do you really need? You may not need the software that costs you $200 a month. You may need the software that costs you $20 a month, or you may need the software that is free. But you need to know exactly what it is that you're looking for and what you're keeping track of. If you're a new business and what you're basically keeping track of is the money that's coming in and the money that's going out, you don't have a lot of complications in your business yet because you're not big. You are just getting started. So you want to get in the habit of keeping track of your transactions. And remember, again, keep the business separate from the personal. And you also want to look at how automation is helping in keeping track of what's happening in your business and in getting you ready for taxes. So another thing that you need to look at is you need to know what your deductions are. Oh my goodness, well, how do you know what you should be deducting from a tax standpoint? Business expenses can lower your taxable income. Okay, so what are business expenses? Well, let's look at some of them. Let's look at office supplies that we have for the business, the software that we're buying for the business, any travel and mileage that we have that is business related. These are things that you're looking at to see what is it that I'm keeping track of. And you want to track all of this. I'm keeping track of that goes into my business versus into my personal. You may look at, from a general standpoint, you want to talk to your financial professional, whether that's going to be your accountant or your tax preparer or your bookkeeper. You want to talk to them about how do you keep this separate? Okay, how do you know what's what? And they may tell you something as simple as, how many vehicles do you have? Well, I'm a new business. I only have one vehicle. Okay, how much are you using that for business? How much are you using that to get to and from your clients, to do work for your business and in your business? Well, maybe I'm doing probably 50% of that is going to be for my business. And so, okay, if that's the case, they may tell you something very simple is as you keep track of the things that you're doing for your business, you may want to take 50% of that travel that you're looking at that mileage that you're looking at those repairs and maintenance for your car that you're using for both business and personal. 50% of that is a business expense, and 50% of that is a personal expense. Now, when you do that and when you sit down with the person who's going to help you with your taxes, you've already got everything set aside. Then that tax preparer is going to look at what does the IRS say you can actually use of the time for travel and mileage that you used in your business. So if you keep track of things so that they make sense to both you in your business and make sense to the tax preparer, then it makes the job easier for the tax preparer to sit down and say, okay, let me look at what the IRS said the taxes are going to be for this particular year and how we're going to use this information. If you are a home-based business, are you using your home as where you are doing your business? So for instance, if I am a company that let's say I'm a service. Okay, so my service is I'm a consultant. I work with businesses and I spend time with businesses helping them understand how to move forward and grow. But I do that out of my home. And then if I need to go see a client, then I can get in my car and I drive to that client. But a lot of my customers are virtual. So I have a place in my house that where I do my business, and that one place is for business only. So maybe I have a room that I do my business out of. That's my home office for my home based business. What percentage of that is that of my house? How does the IRS look upon that as I can use part of what I pay for living there as part of what I would pay for my home office? Again, this is a conversation that you want to have with your financial professional. Business meals. Sometimes we go out and eat with our clients, or we meet clients at restaurants, or different things like that. What are we doing with that? Again, we're going to keep that information separate so that we know what it is, so that when we hand it to our tax preparer then knows what the numbers are that he or she can work with according to what the IRS has said is appropriate for taxes. So when it's talking about knowing your deductions, it's knowing how to separate out those things that you do that are specifically for business. Remember that separation between personal and business. I need to know exactly what is being done for business. I need to keep very good records. I need to keep track of all the things that I'm doing so that when I sit down with my financial professional and I hand over those numbers, that those numbers are backed up by the receipts that I have and the transactions that have been put into my software. So the deductions are not as crazy as you may think they are. They're not then it's like, oh my gosh, I need to know the tax code. You do not need to know the tax code. You just need to be a person who tracks what's going on in your business. And looking at your tax obligation, what are you paying for? What does all this tax stuff actually mean? So we have income taxes. Now, in some states, we have federal income taxes and we have state income taxes. In other states, we have federal income taxes only. So again, we're going to put this information in front of our financial professional who's going to be able to figure out how all this comes together. But we need to have a good idea of what these obligations are. Do we sell a product? If we sell a product, are we um, are we is it important for us to have sales taxes on those products? And that's going to depend on what state you're in. What does the state say about your sales tax? And what does the municipality that you're in, the city or the county that you're in, say about sales taxes? And what happens when you are selling things online? You still need to keep track of all this so that you know what goes to your tax preparer. So the tax preparer has the best information in order to put that in front of the IRS. Do you have employees? Are you paying payroll? What is an employee? You need to know what that is. You need to know what payroll looks like. You need to know what payroll deductions are. And again, we have classes that go into this so that you understand what those deductions are from an employee's paycheck and also what the obligations are from your company that match what comes out of an employee's paycheck. As a business owner, are you paying self-employment taxes? So what is self-employment tax? That is the Social Security that you pay and the Medicare that you pay. So let's go back to if you have payroll. If you have an employee, there is a deduction that comes out of your employee's payroll that pays half of the Social Security and half of the Medicare for that employee. As a business owner, you pick up the other half, and that goes to the federal government, and it pays for the Social Security and it pays for the Medicare. Self-employment, you are paying both halves. You pay the whole thing, okay? And so you pay the full amount for Social Security and you pay the full amount for Medicare. Why are you doing this as a business owner? Because you want to have that ability to use Social Security when you get to the point where you want to leave your business and retire. And you also want to have paid into Medicare for the same reason. So what kind of deductions can you have? And we talked a little bit about this before when as your tax obligations, when we can look at your home office. That's why it's important to know if you're working from home, do you have a dedicated space that is just for you to work on your business? Do you have equipment that you're paying for? Do you have a vehicle that you're paying for? Those can be deductions. Do you have office supplies, et cetera, et cetera? So that's what your tax preparer is going to be looking at, those figures. And then are there any credits for what you do, for research and development, for healthcare? What kind of business do you have? Do you have the kind of business that those credits will apply back to talking to your professional? And a tip for you is to set aside 25 to 30% of your income for taxes so you don't get caught off guard. What you don't want to do is think that everything is taken care of, and then when you file for taxes, you find that you have a big amount that you have to pay to the IRS and you don't know where that money's coming from. So Put a little savings account aside, and that's going to be you just tell yourself that as you work in your business, you're putting aside that money for taxes in case. When your tax preparer does your taxes, you may find out you put aside that money and you didn't need to. Now you've got money that you can actually feed back into your business. But just, it's better to be safe than sorry. Give yourself that cushion. If you need it, it's there. Just don't feel that you need it and it's not there. That is a horrible, horrible thing that you'd have to go through, and you don't want to do that. So we talk about compliance, and what is compliance? Compliance is maintaining accurate financial records for tax and legal purposes. If I have my paper, if I have my electronic receipts, invoices, returns, bank statements, etc., and tax, IRS, I need to see, or you're not compliant with something that's in the tax law that probably you don't know anything about, then you've got something to back it up. Remember, the federal government wants only two things: paper and copies. Make sure you always have your paper. Now, if you're not a paper person, make sure that it is kept electronically. But I'm kind of old fashioned, and I have a tendency to do both. I will have it electronically, but I also have my paper copies. Okay. And when you're looking at retention, how long you need to keep this stuff, talk to your tax preparer about that. Talk to your financial professional about how long you need to keep this. But you always, if the IRS or any government agency knocks on your door and asks for something, you want to make sure that you have that something in front of you so that, yep, I've got my paperwork here. Everything is done and in order. So what are the best practices that you want to do? And this is really a recap of what we've already been talking about. Use some kind of accounting software to track your money movement. And this is as your company grows, choose an accounting software that will grow with your company. There are softwares out there that are very inexpensive, but when you start to grow, it can't grow with you. That's part of what you're going to be doing as you are researching what kind of software is out there. If you are very new to this, you're just getting started, you don't have to jump in and buy software right away. Start putting stuff into a spreadsheet. But you also, while you're putting the things into the spreadsheet, you want to make sure that you're doing the research to know that next step is going to be accounting software, and what kind, how much, how big, what's its functionality, etc. Set up a separate business bank account. Back to that one thing that we talked about at the very beginning. Please, please, please keep separate your business from your personal. So if I am going into business and I am calling my business the Bryant business, the Bryant company, then I'm going to set up a bank account that is for the Bryant company. My debit card is going to say the Bryant company. My bank statements are going to say the Bryant company. My credit card is going to say the Bryant company, because all of that is company based. That's my business account. So this is kind of, the last one is kind of a very practical, common sense thing, but sometimes we get so caught up in all the things that are going on that we don't get our taxes filed on time. Please do things in accordance with the time frame, because if you don't file on time and you owe money to the IRS, fees, and will start to add up, and you don't want that to happen. Okay, so file on time. How can you file your taxes on time? The first rule in filing your taxes on time is keeping your financial statements and your transactions up to date. That means that when your bank statement comes in, you reconcile that bank statement at that time to make sure that what the bank said happened to my money and what I said happened to my money matches. That's what reconciliation is. It is to look at what the bank says. They send me the information. They send me a statement. They says, hey, this is all of the stuff that we saw happening through your business account. And you're going to look at that versus whether it's your spreadsheet or whether it is your accounting software. You're going to look at that and say, this matches what the bank says. This matches what the bank says. Uh-oh, this does not match what the bank says. If I have things that do not match what the bank says, I need to know why. Okay, so if I do that consistently, I am always up to date on what the bank and I agree on. Then when it comes time to file my taxes, I've got all my information ready. My job as a business owner when it comes to taxes is to make my financial professional look good. I'm trying to make it as easy as possible for my financial professional to do my taxes so that I can get them done, out of the way, and I can get back to my business. What I'd really like is that I don't have to pay. I've paid everything that I'm supposed to pay and I'm fine. Isn't that a comfortable feeling? Maybe I've paid everything I've paid, but there's a little bit something else that I owe. Well, I've got that account that I set aside. I'm not pulling this out of my regular operating fees. I'm pulling this out of the account that I set aside just in case. That's my just in case account when it comes to taxes. Or what if I file my taxes and I find that I get a refund because of all those deductions that we've talked about? I gave my financial professional all of this information that I have kept up every single month. And so my financial professional looks at this, looks at the IRS laws, files my taxes, and goes, oh my goodness, you get a refund. Isn't that a fantastic feeling? So we want to take the stress out of doing taxes by doing a little bit every single month so that when December comes, December is not the cross between I got to get these gifts out to my family and friends and the panic of, oh my gosh, we got to go into tax season. Well, let's just release all of that because we've kept up with what we're doing and we're doing things in a logical manner and they make sense to both the financial professional and to us. And the IRS is taken care of. We're fine. So when do you hire a financial professional? Okay, so let's just say you just got into business. You're deciding to go into business. Do you need a CPA or an accountant or a bookkeeper or a tax preparer? You may know how to do this stuff yourself. You may know how to keep track yourself. You don't need anyone yet. You may know how to prepare your own taxes. You may not need anyone for that yet. But when you do, let's talk about what these people do, okay? A CPA, that stands for Certified Public Accountant. A certified public accountant is someone who is licensed by the state. They also have to take a test. And I am told I'm not a CPA. I am an accountant, but I'm not a CPA. And I am told that the CPA test is long. And there are a lot of questions that you have to answer. And it is something that I decided I didn't want to do. The CPAs decided it was something that they did want to do because they want that certification, they want that information. So they have to go through a testing process. Then they also have to work for a CPA firm for at least 2 years. Now, why does a CPA have to work for a CPA firm? You need to know what a CPA firm does because you're probably going to start one on your own if you're not going to continue to work in someone else's CPA firm. So you need to know what a CPA firm does and how they interact with their clients. You also have to have somewhere between 500 and 700 audit hours. So what is an audit? I think of an auditor as someone who comes into the business with white gloves and tweezers. They're looking for things that are not working well because they want to make sure that those things get taken care of. Let's find out where the problems are so that we can make those problems go away. Let's set up the procedures, let's set up the training, let's set up the processes that we are going to be moving smoothly in our company from a financial standpoint. So that's what an auditor does. They come in, they tell us things they found, and then they help us figure out how to mitigate those issues that we have. So what's the difference between a CPA and an accountant? Oh, one more thing that a CPA has to be is a CPA has to have at least a bachelor's degree. So what is the difference between a CPA and accountant? First of all, an accountant has to have an accounting degree. Okay, so they need to have that thing that says to the public, yes, I've gone to school. Yes, I've learned how to do this. And yes, I have a piece of paper, a certification, a diploma, a degree from an accredited university that says, yes, I am capable of being an accountant. In some states, when you get that degree, you can actually hang out a shingle and say, hi, I'm an accountant and I would like for you to be my client and I would like to be your accountant. And in some states, you cannot do that because those states say, no, 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 you can be an accountant because you got the degree and you went through all the stuff that you need to go through. But in this state, you must be a CPA in order to hand out a shingle. So I'm in the state of Nevada. State of Nevada says I cannot hang out a shingle to the public and solicit the public to come to me so that I can do their books. I must be a CPA in the state of Nevada to be called an accountant or have an accounting firm. If I work for a company and the company has a job description and they title that job description accountant, I can have that within their company. But there is a difference between being a public accountant and being a private accountant. A public accountant, I can go out to the community as a whole and say to the community, I would like to offer my services to your community. As a private accountant, I am working within a company, within a private organization, within the rules and regulations of that company. I am not soliciting information or I'm not soliciting customers from the community as a whole. And so what is a bookkeeper? A bookkeeper does not have to have a degree in accounting, but can. A bookkeeper does not have to have taken bookkeeping classes, but can. Some bookkeepers have learned on the job and they're quite good at what they do. And some bookkeepers have gone through bookkeeping classes, some have associate degrees, some have degrees in accounting. Okay, so what is the difference between an accountant and a bookkeeper? A bookkeeper is someone who can keep track of all of your transactions, just like an accountant can, just like a CPA can. The difference is that there are things that an accountant can do and things that a CPA can do that a bookkeeper cannot. So a bookkeeper cannot certify your financial statements. They can compile them, they can explain them to them, they can teach you how to read and understand them, but they cannot certify them. And in some cases, maybe when you're going to the bank, they want to see certified financial statements. Or if you're looking for a grant, they may want to see certified financial statements. A bookkeeper cannot do that. A bookkeeper is, think in terms of a tracker of your money. That's where making sure that those invoices, those receipts, those transactions that you have, that money coming in and money going out, is put accurately into your system so that the reports can be generated that allow you then to go to your CPA if you have one or if you need one, or to your tax preparer. So what is a tax preparer in this whole idea? A tax preparer is someone who has taken training and been certified through the IRS. They have to have a number, they have to have a certification number through the IRS. And a tax preparer needs to know what the current tax provisions are. So you'll find that a lot of tax preparers are going back and they're taking classes. Maybe the classes are starting in, let's say they're starting in the summer or the fall for the new tax uh, taxes that they're going to have to fill out for you for the current year, but you don't fill those taxes out until the next year. So if I'm in 2025, I'm actually working in 2025 as a tax preparer. I'm going to go find out, I have to take these classes to find out what is the tax law that covers the year 2025, so that I am up to date on what the IRS is looking for. So when you as a business owner bring me all this information that you have been keeping track of all year, and you're giving it to me in a way that I can take that information, apply what the IRS says needs to happen for taxes for that year, and then I can send that into the IRS. So do these things overlap? Oh, yeah. Yeah. An accountant can also be a tax preparer. A bookkeeper can be a tax preparer. A CPA can be a tax preparer. Okay. And a tax preparer doesn't have to be anything but a tax preparer. They don't have to be a bookkeeper. They don't have to be an accountant. They don't have to be a CPA. So when you're looking for your professionals, look for what you need where you are at the moment. And so when you're looking at all of this and you're looking at your financial professional, you also are looking for somebody who can help you. If I'm working with a bookkeeper, I want to make sure that we're in compliance, that my tax filings are going to be done correctly. Now, they may not do the tax filings because they may not be tax preparers, but they are preparing my data so that when I go to the tax preparer, it is all put together correctly. I want to make sure that I understand my finances, that I can look at my financial statements and actually know how to read and understand them, because it helps me to make better business decisions. And my strategic planning. How do I know how I'm going to move forward if I don't know how my money is moving in and out? So, a tip is that you want to build a relationship with a trusted advisor, excuse me, for year-round support, not just during tax season. So if I'm working with a bookkeeper, I want to have that relationship with that bookkeeper so that I'm making sure that everything is being put in correctly, that I understand how to read this data that is coming back to me, and that I can use this data in an appropriate manner to move my business forward, not just not just for taxes, but also for the building and growth of my business. So some final thoughts. Please take the time to get the help that you need, and make sure that help is appropriate for you. Again, you have to do some research. You don't have to do it all on your own. A bookkeeper or a tax preparer can save you time and help avoid costly mistakes. You may not understand something if you're using a tax software. There may be a question in there or a space that you have to fill out. You're not exactly sure what should go in there. Ask for help. Okay. You can also get free advice through your local SBDC, that stands for Small Business Development Center. They are nationwide, and you can get free advice through them. They are advisors. All you have to do is go to their website and sign up as a client with them. And you can get information through SCORE. So SCORE has SCORE advisors, and they call them SCORE mentors. Okay, and so you can go to your local SCORE office, and again, you can sign up to have a SCORE mentor. Do you choose one against the other? Absolutely not. Use as much of somebody else's good information to help you as you can. You can easily have an SBDC advisor and have a SCORE mentor at the same time. Start small. When you're starting your business, you're not here to take over the world yet. Start small. Stay organized. The organization is going to make a huge amount of difference in how you work through your business. And don't be afraid to ask for help. A little planning can make your tax season much easier and your business more successful in the long run. Ask for help, get organized, do your research, ask questions. If somebody gives you a piece of paper and you don't understand what the piece of paper means, ask them to explain it to you. And please understand that when people start to explain these things to you, and if you don't understand the explanation, stay in the conversation until you do. Or go to a different advisor and ask that same question, because you need to understand this. This business is yours. Thank you very much for joining us today to talk about taking the stress out of that whole idea of tax season. Tax season, you know what? You've got everything under control. Tax day is just another day. You're fine. My name is Brenda Bryant. I'm an instructor here at UNR Extension, and I'm so glad you came to join us.